Okay guys, hi everyone, good Sunday. We should be on live right now, so let me know as usual if you hear me well and if you see me. And yeah, thank you for joining the weekly forecast session as usual on the 5ers channel. Thank you guys. Yeah, today it's not gonna be a long session. It's 4th of July, so the market in US are closed. There are still the futures markets trading, but we're not gonna see a huge and important volatility movement. There is no liquidity. Wall Street is closed, so expect for a low volatility trading days. Forex is still open as usual, but it also get impact a little bit on the Forex market. Indices definitely that only the futures is actually able to trade, but the spots and Wall Street are actually closed. So this is a vacation and holidays in US for trading. You are coming through fine. Perfect. Thanks. Thanks, Bob, for the feedback. 4th of July. Yeah, before. Okay, let's start the session as usual. We're going to see the dollar index. This is something I've been looking every day, especially on this weekly forecast. We're going to continue. I will also show you the trades I'm still in the dollar card short. It's been already 2 weeks that I've been holding this, managing the trades. Let's move to the dollar index first of all. Hi Ben, hope you're well. Let's move into the dollar index. Okay, so this is the H4 chart. Last week we see after there was some sell-off in the indices. We see dollar index again reaching his latest top around 105, and actually we are struggling to pass this area. I would like to remind as well that in the monthly chart, you know, it's still broken here, but you see the confirmation is not like I want to have. Okay, generally when you have a breakout, it should be a huge closure above this zone. Actually, you see, even on the monthly and on the weekly chart, it's been the breakout. It's still very weak. Okay, so again, I will continue with my perspective. I expect the dollar index to have a small retracement, especially on this line. You see the average price we have here. So especially on 101. So it will give us again some opportunity on the short-term overview in the euro dollar, in the pound dollar, in the dollar yen as well. Okay, I know that in dollar yen it can be a great opportunity after the huge depreciation in the yen. So yeah, I'm still expecting in the longer time frame, but also on the short time frame right now. If you see the H4 chart. Okay, I'll here expect at least for the next week the market in the dollar to be ranging. Okay, we have the top that respected here. This is the bottom, so at least I expect trading the dollar index between this range, 103.60, 105.60. So you have an interesting consolidation here. That would be great to take into account for trading the dollar this week and the next week. So that's the first thing for the dollar index. Talking about the indices, as I as I explained at the beginning of the session, today it's 4th of July, low liquidity, low movement. Maybe we can have a recap of what's happened last week. I will straight away move into the MT5 account. Okay. And let's go into the S&P. I'm trying to do S&P. That's fine. Okay. So this was a movement I expected last week as well. Okay, if you remember, I expected the gap to be closed, especially at that point. Okay, so actually we go a bit above, but again, this actually movement up was respected. We closed the gap that the market opened in the 10th of June. Okay, we go even below, and then after the rally here, we had a consolidation zone. You see double top here, especially on the gap, and then we get down here. So today we're going to see maybe not a huge movement, but the market, you see, tend to make a lower, a higher low. Okay, when you have this kind here of market structure. Okay, so it's especially the same movement that we had here. Okay, the market tends here to make a higher low. Okay, and if we see this in the daily chart, we see last Friday the market get down, especially on the average. This is the average Bollinger Bands prices. Also in the gap. Okay, we had a doji, especially here at the gap. We get down, and last week we had on Friday here a candles that, you know, very close for a bullish engulfing. And today the market is starting to push higher. So maybe from here we're gonna see some bullish movement. Maybe it's the end of the huge, you know, the S&P and the American indices already get down around 30% from the beginning of the year, and you know, at some point the market have to make a movement up. Especially myself, I believe that the market already priced the recession, already priced the hike in interest rate. Everyone knows that they're gonna be, and it should be again an increase in interest rate in US to fight inflation. If I know that other traders know that, other hedge funds knows that. So, you know, it's not going to be, this is something the market already priced, especially here. So, you know, if you know what is DCA on the long-term investment, that I still think that it could be the great place to get into the market. And of course, there is, if we go even below that, the zone will be around, you know, this zone in the S&P, which is around 3,300, which is the top of the COVID. If we have a lower movement, it will be definitely to that zone. And here again, we're going to see some buyers coming into the market and start buying. So again, there is still a lot of problems in the economy. We have inflation, we have hiking interest rate, we have debt. Bonds are, you know, pushing yield in interest rate in treasury yield as well. You know, there is a lot of macro things that I'm looking from a side. I'm not so much putting myself into what's happening in bonds, what happened in yields, but I know that everything is moving, and this is something that we never see before. So yeah, the market can still go even lower, but you know, from my perspective, this might be again a new movement up, like here. Okay, it was actually a bottom, we pushed up, and then we're going to get down. So especially for that week, maybe we're gonna have a pushing in the upside. We should be careful about that line, that when we are still going into this line here on the H4, maybe we can see even better on the H4 chart. You see, this is when we start the bearish trend. Okay, respect here, we are actually making higher low, so we might going to see the market making an interesting decision at that point. Okay, and if we back it above, the market will go back in neutral. Okay, I'm not telling that the market will get bullish again, but as long as we're going to break this huge trend line on the H4 chart and on the daily chart, the market will reach this zone on the S&P. It's 4,100, and the market will come back to a neutral perspective. Okay, but I cannot say that when we break this trend line we're gonna hold buying for a long-term perspective. So this is what I see, and for the next week, yeah, I think that we have nice bullish reaction here. Okay, when we close the gap, we make a lower leg movement, and today we are actually respecting the higher low pattern. So I found this very interesting. Okay. If we go to euro dollar, you know, we are still at a very key zone area. I think it's a question of weeks or months. We're gonna see an interesting movement, either north or downside. The dollar, you see, starting to get strong. We might have some short-term retracement. So if we go to lower time frame, you see the market already entered a consolidation zone, already respect multiple time this zone. Let me check, hold on. See, so the market today is at the demand point. We touched one time, second time, and today we dipped. We had a dip lower, and the market retrace. And on the daily chart, it's still holding. Probably missed the opportunity here. I won't open a trade at that zone because the risk reward would be hit the low. So I prefer to wait, making a buy limit or being in front of the market, especially when we have this huge, you see, movement straight below the rectangle, which is the demand, breaking very hard the Bollinger Bands, showing a huge contrast in volatilities. And especially today, you know, actually this not happened today. Yeah, this happened on Friday. You know, when we have a market like today, which is in holidays, and you have low liquidity, generally we cannot expect like a huge breaking movement. And on the daily, you see, in order to break actually that zone, we need to have a huge volatility movement, huge liquidity market, and today it cannot happen. Okay, because of US traders in holidays. If I go to lower time frame, yeah, we see the double bottom reacted well. Yeah, there might be a huge opportunity on, you know, 15 time frame, 13 time frame. Like, you know, guys, I don't like trading during holidays. The market is very slow, and generally there is spreads. There are spreads in the market. You don't want to be in that situation, and personally I don't want to. So I'm just looking, you know, thinking about my week and what can I do in the next days. Getting the dollar CAD position, I'm still in. See, we have to be very patient for this type of trades. When the market, you see, maybe I can connect to my account here. Okay, so you see I'm still in the dollar CAD positions. I'm still in. I like that the market respect this supply on the H1 time frame. You see, this is supply, a median supply. The market dipped into the so we pushed into this rectangle and get down straight after. What's happening in oil? Might be interesting to know what's happening in oil. But yeah, we should be 110. The market is pushing a bit today. I'm still bullish on oil, guys. I don't see the oil market getting below 100 in the next weeks. Maybe I can show this here. Yeah. So we are here today. It looks like the market wants to push even higher. Okay, respect higher low in both of the point. So this will, confirm the way I want to be in the dollar card market. Expect the oil, exploding to again the top here 120, 130, and the dollar card will probably crash down. According to the price, the negative correlation that the oil and the dollar card have. But yes, I don't see, and I read a lot of article and news that there are still lack of supply and huge demand. Yeah, this is oil, the oil market. If you go to wheat, I think the wheat. Yeah, this is kind of a bubble. It's like, yeah, we'd already get down before. This was, if you're expecting, I think ZW. Yeah, this is the futures. Okay. Look, you don't have this opportunity in the market. We are not offering wheat in the 5ers, but because actually it's highly volatile and even because lack of liquidity, we cannot provide this type of assets from a risk management view. But you have this type of opportunity once in life. Okay, it's the highest price was in 2008 in wheat. We reached 1,300. The market had a huge volatility movement. It was the same behavior here. Okay, it's 2008 crisis, commodity price exploded. The same here. This is probably for another reason. Actually, it's because of Russia and Ukraine that actually in a war, and they are one of the biggest producer in wheat. And yet the market you see is like very healthy here, and of course from a world perspective, everyone needs wheat in any country. It will not be sustainable for people to eat whatever, bread or I don't know, pizza to break out above it. It will not be sustainable, and it will be the same in oil. We'll see that when the market will go to 150, 160, at some point country will say, okay, this is not sustainable for our country. The customer cannot actually buy, and because of the law of supply and demand, I don't know if you see doing economic courses, you have this chart having a supply and you have demand, and when there is a lack of demand, the price of the supply needs to go down to have a transparent and equilibrate market, and it's here actually what's happened. But look how technically the market react. It's wonderful. Get back to 846. Which is, and when you see, and I think it's also one great signal for indices, when you see this type of crash in commodity, generally commodity, there is a lot of speculate and edging into the wheat market. When you have this sell-off in the wheat, this means investors are putting off their edge. They probably had an edge against inflation and against crash in stock market, so they actually allocate some cash in commodities like wheat, like soybeans, like oil as well. Oil is a bit different in terms of scenario, but wheat, I believe that soybeans or called the agricultural commodity might be the same. Like all the food, that's the same. You see, it's soybeans as well, and I think it might be the same on corn. Okay. Yeah, especially the same. You see, all the food commodity prices are crashing down, and the reason is clear for me. Markets already understand that the way we are and the way we stand for inflation. This was the edge against inflation for already a year or few months, even more than that. People are taking their actually edge they have on commodities. The food market was overpriced, okay, from a technical view and also from a fundamental view. I won't enter into deeper into the explanation of why food commodity price were exploding too much, but it will give some fresh air in the indices, in the stock market. When you have actually this type of chart getting down, and you have you have actually Facebook and that's went down from 360 to 160. There might be a change in the structure in the overall market. Okay, so we might see expanding stock market getting up again, as we see commodity food price getting down, getting crushed after it was a mix of speculation, of hedging, and because lack of supply. Actually, it seems the market in the food area has been understanding the market, and it's quite impressive. I want also to check the Reuters. Yeah, this is what I want to see. Okay, yeah, we get down also from here on the commodity index. It might be technical, okay? It might be that the problem is even bigger than that, but when I see the chart on wheat and on corn, I don't see the market making a new high. Very difficult for me to expect, buying your pizza twice the price that is today. It's happened because of inflation, but it can be even expensive if the wheat already continue. So yeah, we're gonna get some discounted pizza, I hope, in the next year. That's nice. Any questions, guys, on the chat? I know I've been talking about commodity. This is something that fascinating me. It's still 1st of July, so there is low liquidity in the market. But still, let's move back into MT5 and talk about the yen. That will be the last things I'm going to look for today. Might be gold as well. I want to talk about gold, but let's look about dollar yen. What's happening? Yeah, this cannot be like that. I should refresh the chart. Okay. I'm missing some data here. Let's load the chart again. Anyway, let's move to the euro yen. I think there might be an issue in the euro yen. I have some issue by loading the chart. Might be we're starting my MT5. Come on. Okay, I'm gonna reload my MT5 meanwhile. Yeah, it seems it's only on the yen. Ah, okay. This. Okay, this is better now. Okay, perfect. Perfect. Okay. Okay. Okay, so on the yen, the yen is still very weak against the dollar. That's something we see again, especially today. The market respect this support line creating last week, but we have also a highest point that it respect. So from the H4 charts. Yeah, for me, I think for already people traders that are in the trading room usually on Monday, especially I feel that the dollar yen is overextended at some point. I don't know where to actually open a sell into the market, but I don't want to make a buy, especially at that point. Maybe we can, on the H1 chart and very low time frame, getting some momentum. But if I go to a higher time frame, the market already overextended. I heard and I read a lot about what's happening in the yen. It's been like the Bank of Japan is on big trouble after this, after all the hedge funds and traders, speculative funds that have been let's say, crashing the yen, especially. But at some point, the Bank of Japan will come and make any, like in the Swiss purse, when they made a selling price. This might happen on the yen, definitely. So I think I should be very careful by doing anything. I don't want to hold a buy, especially on the yen. It's been overextended too far on my side. Yes, look, it's actually the 90. We are the 2002 level. The next point will be 1998 after 89, and then we have like a huge liquidity gap to 85. There is a long road to go, but again, when you have this overextended movement, at some point you might expect a retracement. Yes, and we had some traders, especially at the 5ers, that, especially at this point when you had here multiple doji on the H4 chart, and I think on the H1 you will see, this consolidation structure you have here. Give you that, okay, the market might be this might be making another movement on the lower side, and here today also great support that hold, especially the market can reach again the resistance zone. There are good technical signal in the yen, okay, if you want to trade on the 30 on H1. I think it's nice to have the dollar yen into your cross. Yes, the 10-year yields way down. This is yen driver. That's something I didn't know about. So I might be reading a little bit more about that, but yeah, there is a lot of macro signal that lead the yen to depreciate like that. There is a lot of things. I think I could even learn more about why we had this huge movement. I already know some reasons, but the yields I didn't know about. I know that the dollar is strong, so this is one of the reasons. But you know what about the yield, I didn't know. Okay, guys. Alright, turn down. Okay, it's 4th of July, so still holiday in US. Not huge movement in the market, especially on indices. The market will close a little bit earlier today. So again, it was a short session. I hope interesting. I discussed and talked a lot about agricultural commodities. That's something, you know, we should have in mind. It's something that you can see, let's say, one time in your life here, one time in your life. So huge crash after the boom in the food market. The agricultural commodity like wheat, corn, soybean. Oil is the energy, so it's something a bit different. We can learn a lot about that, and I invite you to read more about those kinds of market in the web, in the internet, and understand that it's already have an impact also in the stock market, in the dollar, and in all the market we are actually trading in the 5ers. So again, thank you for being with me for this weekly forecast. I hope you enjoyed. It was a short session, interesting, and again, guys, see you tomorrow for another trading room with Saul. I'm gonna make the live on Wednesday. I wish you a nice day, a nice week,